Pulte Group rallying higher after reporting earnings this morning. Diana Olick joins us now to break down what is behind this move. Hi, Diana.
Hi, Melissa. Yeah, Pulte beat expectations and offered a pretty optimistic outlook for the housing market in the second half of this year. So after plummeting 53% annually in April, new orders at Pulte jumped 50% in June, showing that incredible V-shaped recovery the builders have been seeing. Buyers are looking for larger floor plans with multiple rooms for working and schooling from home, and they want high tech, which is, of course, the builder's sweet spot. Now, Pulte reported strong demand across all geographies and a 77% jump in June orders from first-time home buyers, as well as a 21% annual gain for active adult, which had been lagging. Pulte CEO Ryan Marshall said on the earnings call, "We are very encouraged by the fact that the momentum of this dramatic recovery continues as demand has remained strong through the first few weeks of July." That strong demand allowed Pulte to raise its prices in more than half of its communities, anywhere from 1% to 3%. Also, its cancellation rate is coming down. Now, Ryan added that Pulte is fully up and operational again with showrooms open. They are also buying land again, which most builders had stopped doing in March when the pandemic hit. Also, he mentioned a zip code analysis they did on buying patterns that showed a movement of renters and homeowners from urban centers heading to surrounding suburbs. We've heard that before. Now, the strong results were enough for Pulte to reinstitute guidance for the rest of the year. Melissa?
All right, Diana. Thank you, Diana Olick. Despite Pulte's beat, both the home builders ETF, XHB, and home construction ETF, ITB, closed in the red after spending the day mostly higher. Karen, it looks like we have the data now to show that there is an urban flight out of the cities. Does that make the home builder story even stronger?
It does. I mean, I think we're in the early-ish stages of that flight. I mean, the home builder, and going into this downturn, they were in a pretty good position in that there wasn't a flood of inventory at all. And so they're still not. And so obviously then when you get more demand and you don't have a greater increase in supply, you have a pretty good market. But we're seeing it over and over, the same trade. If we look at something like a Whirlpool and how strong their earnings were, even Best Buy talking about their appliance strength. So, I mean, there are people who are still employed, not as many, of course, and then you have interest rates at this level that we haven't seen maybe forever for some mortgages. That's a pretty good mix, and we don't have oversupply. So I like the home builder space, and I think we're going to continue to see strength there. We've seen it in Home Depot. We've seen it in Lowe's.
Yeah.
The whole flywheel.
Tim, do you like home builders, or would you go down the food chain a little bit, so to speak, and go to, say, the Whirlpools of the world, or the flooring people, or, you know, Sherwin-Williams?
Yeah, well, I like Whirlpool. I like Masco. In fact, I've been having trouble. I finally waved in a Whirlpool refrigerator after about a 6-week wait. So there's a lot of pent-up demand. There's a lot of supply chain issues, frankly. What is the active adult segment of Pulte's bid? What does that mean? Am I an active adult? I don't really.
I mean, really sure with that. I think you're active. Active in what way is the question, but
I don't know. But I will say this about Pulte: going into COVID-19, this stock was on a tear. So when you consider that second quarter order growth, and when you look at the gross margin and everything you just talked about with these secular trends, I think this is a stock you stay with. I actually think Pulte is the one that continues to run.